Good morning, all. Dan here from tradingology.com in the trading room for March 9th, 2021. As usual, we do have Dave joining us from Strong Market. So good to see you, Dave, on this fine Tuesday. How are you doing?
Good morning, everybody. I'm
He's
doing
probably
well.
getting mic'd up, or I'm on mute. There we go. Unmute my speakers so I can hear you.
Okay, good morning, Dan. Good morning, everybody. Jeff, Curtis, Andre, the usual suspects.
Jeff's in the house. Good to see you, Jeff. I did see an email from you, so I'll shoot out a reply very shortly if we don't get to anything today. But I think you were looking at the spreadsheet and a couple of the indicators for the target hunter strategy. And the strong market indicator, I can answer you quick, should be in the same bundle as you already have with the rest of your strong market bundles. So nothing new there. The only new ones were for what is in there that you probably already saw. So if you're looking for the strong market ones, you don't see it via the Pine scripts, let me know and I can point you to where it is. And I think a few other people might have been asking about that. And I think the last thing you saw was the spreadsheet. I still have to fix like one or two more formulas and I can get that guy up there. I had forgot about it, so I will get back to that one. So thanks for the reminder on that, Jeff.
Yeah, good to see you, Jeff. Actually, yeah, I haven't seen you in a while. Hope all is well for you and your wife.
You're welcome, Dan. Does that cover everything you were looking for? Let me know if there's anything I missed. And with that starting up, we'll keep an eye. And obviously everybody saw the big news over the weekend. They had the vote-a-rama, they're jokingly calling it, with the Senate passing the bill. Now the House should be voting on it today. And it definitely looks like the market's building that into its expectancy, if I can call it that. Where we're up near real-time or all-time highs once again. Let me pull over the index chart here. Yesterday, Dow hit another 32,148 all-time high. NASDAQ came screaming back this morning with yields going down, so we'll jump on the yield story in a second here. But they are starting to pull back just slightly right now, but just 3.5% up right now is the NDX.
Yeah, we'll see if that's a dead cat bounce or not, because the NASDAQ has really gotten hit hard over the last few weeks.
Jeff says that's it. All right, cool. Thanks, Jeff. Interestingly enough, I do see some little infighting going on in the YM future so far this morning, where we were happy in the morning. We started off, I think you mentioned it offline, where there was a pretty decent supply and demand number here that printed on the 10-minute chart of a 90. Did you see any bigger ones?
Oh, yeah. Early on, if you go down to a very small, maybe a minute time frame, there was some minus 700s, minus 500s that were offset with some plus 500s and 600s. So lots of activity going on there this morning, right at the start. Yep, you can see that.
Oh yeah, there we go.
Pretty big.
So definite activity firing up there.
Yeah, they weren't real long. I saw them just real quickly fly through there, minus 700, minus 800, minus 500. And then it appeared that they were offset pretty much. I don't know if you can capture any of those. Probably.
Yeah, it looked like it was. I went back to the 10-minute chart, so.
Yeah, so there's some offsets there, but some pretty big numbers being printed. Not sure exactly how that's going to play out for the Dow. Looks like we're headed higher.
Yeah, which is typical. We see that more commonly hitting on the NDX before we see it on the Dow. So it's interesting when they pick and choose where they're going to throw their orders back and forth at. And speaking of that, I'll pull up the yield curves here.
Yeah, sold off today. So we've got the yields down. We've got bonds up. We've got the 10-year note up. We got the 30-year up, and big reversal. So is this beginning of Operation Twist?
We will see.
Yeah, I don't know.
I saw some mentions of they've been buying it, and obviously we know they've been doing about 50 billion a month for a good half a year now. Is it going to increase? Are they going to do more? Yeah, it was definitely on an upward trajectory, and we see a big down move today in the yields. We will see, though. The 10-year especially. That's the biggest one so far. What's that? 3.25%.
Yeah. Yeah, so we'll have to kind of see how that plays out, but definitely, you know, a big reversal here on those yields.
We'll see. And our UUP yesterday jumped right over a major trend line. Today it jumped back underneath it, so we'll see how this plays out with the Dixie coming down right now. But it's been on a heck of a run, so one day on the little red isn't going to hurt it much.
Yeah, we've had a nice move higher there. Possible inverted head and shoulders pattern that could take it up to around the 94 level. And not only that, but it appears that they're inversely related to stocks at this point.
That's a new little thing you've been looking at here today, isn't it? I've been noticing.
Yeah, interesting. It hasn't really affected crypto. In fact, crypto has been trailing pretty much pretty good correlation with stocks. But if you take a, let's see, if you go to like something like the YM or something this morning on a 5-minute chart, and then you can do a comparison with the DXY.
Oh, sure. I can pull up a new double chart or something here.
There you go. Oh, well, the Dow future is perfect. And then just go to add a comparer. No, you don't even have to do that. You can do it on the.
Oh, right on.
Yep, right on there. You can do a comparison. Go to compare, the plus sign up there, way to the left. No, it's next to the candlesticks. Looks like candlesticks there to the right of the candlestick.
There we go.
Yep, right there. Type in DXY. And what it'll do is it'll give you a chart of both, and you can see how inverted those are. So yeah, keep it on the 5-minute time frame.
I just moved it a little bit and it jumped like
that.
that.
Yeah, because it does it on a percentage basis. So
gotcha.
But you can see, like when we had a dip, the market went up. Dip in the DXY, market went up. Yep, right there. It looks like that. DXY went down on the orange.
And the market rallied.
And the market rallied. And now we're doing the same thing. We're getting a little bit of a decline on the DXY, and the market is railing again. So there seems to be an inverse correlation here now which has developed over the last few weeks between the DXY and and stocks.
That's fun.
Yeah, and also I would imagine that there's probably some sort of relationship as well with interest rates. So if we get a little bit further increase in interest rates, we might see the DXY move higher with those as well. So is today a single day event of a reversal in interest rates? Are they going higher, or has Operation Twist started and they're putting a lid on it and they're going to keep them low? We'll have to kind of see how it goes.
We shall see. No major calendar events today. There was one small business index. Looks like that was pretty much right on track where they were expecting. But tomorrow and then through the rest of the week, we'll have some more of the regular events that do potentially affect things. 10-year bond auction, I think that's a weekly one if I remember correctly. 30 years. Consumer sentiments, unemployment claims. Looks like they're forecasting 7:30. So let's see if that changes before Thursday. Everybody remember 7:30.
Yeah, I would take a screenshot of that because they do revise that pretty frequently, like they did last time.
Like they revise all their numbers, right?
Yeah.
We'll take a quick peek across the. Yeah, everyone's going to be talking about the tech jumping back. Expected to sign. So the House prepares to pass, so they haven't specifically done it yet. I don't know what time of the day the vote is.
No, I was listening to a senator this morning who said it's going back to the House, and they're probably not going to have it passed until tomorrow.
Gotcha. I know all my websites are not happy because I turned on my ad blockers.
Yeah.
But nothing crazy there outside of what we already knew.
So we've got in crypto too. Actually, if you take out that comparator of the DXY and put in XLM in there, I don't know if you can add a third.
See if it'll let. Then I can just.
No, you got XLM and DXY down there. So let's see. Yeah, that should be okay though. Go to like a shorter time frame. Go to like a 3-minute chart.
Are they all three in there? I only see the one now. I don't think. Okay, let me put XLM back on.
No, you got XLM in there. That's the main chart. Now you got to go to.
Oh, I see what it did. Okay.
Yeah, it reversed you.
All right, so we got XLM. I thought it stayed on the ES chart for a second.
Yeah, and there you go. It's kind of tough because the percentage moves on the XLM are so much larger. But a little bit of an inverse there. Actually, you know what? Go to XLM and the YM.
There's
Let's
a
look at
YM
the
to it.
yeah yeah. Take off the DXY and put in the YM instead. Because there's a correlation. I noticed this morning when the YM was going up, the XLM was also going up right off the bottom. So let's see if we can get a correlation there. There you go. So, and go down to a 3-minute chart. Go down to even a smaller time frame. There we go. So, like this morning, you can see like the Y. Yeah, I know you can't adjust those charts; they're terrible. But you can see like when the YM was going up around 2 o'clock this morning, XLM just started taking off. I mean, the percentage changes on XLM are so much stronger. That's why we got
right.
that.
It's over.
And then, yeah, it was about 2 o'clock, and then around 5, you can see that the around 5:30, the YM started moving lower, and so did XLM. It's kind of tough to see on that chart, but actually, I've been noticing the correlation here that there is some correlation with other risk assets, which include stocks.
And I wonder if we can equate any of that to just the extra funds that are now available. And we even saw some recent information in polls saying, I think you had noticed it as well, was at least half of the next checks that people are already planning on dumping into the market in one way or another. So is this part of that where, you know, people just have these extra funds in there? We start to see more correlations just because of that activity. Complete speculation on my part, but it's just an idea.
Yeah, I'm wondering because CNBC had a survey, and 50% of the people they surveyed said that they're going to use half of their stimulus checks to put into stocks. It's like free money, right? It's like found money. So they're not, you know, if they don't particularly need it, but they want it and they have it, it's like working with the casino's money. Like you go to the casino and you're up, you know, a couple $100. Well, you'll risk a couple $100 to make even more because that is the casino's money. You're playing with the house's money now.
Right. It's that gambler mentality of it's not mine, but it actually is.
Right. Exactly. Yeah. Speaking of gambler mentality, so I've been shorting the market over the last few days, and now I'm slightly convicted here that the market is going to drop. But we have actually.
That's interesting. I went to put in just ES and it pulled up the stock.
Yeah. Yeah, there we go.
There's a better view on a daily chart. Look at that correlation.
Well, that's the YM and the ES. Yeah, they're very highly correlated.
Sometimes they break away because that's the interesting one. Maybe I should switch that to the NDX. I saw some notes on that.
They do. Oh, the NDX and the YM are way out of whack.
Yeah. Let's put the NQ in there.
And I don't know if you guys remember from the Wealth Masterclass, or not the Wealth Masterclass, but the high level mentoring. We did a lot of charting of the difference between the NDX and the YM. And unfortunately, profit charts were removed from TOS. So we weren't able to do it. So I would definitely go over to TradingView to do that. I'll look at that huge difference, right?
Yeah, we were way down here. Look at the big rebound. Just same thing where tech was way flying above. That came back and corrected.
Yep. So if you guys are looking for if you missed those profit charts from the high level mentoring program, I'd go to TradingView and see if you can get that done.
Yeah, it's a good way you can start doing your easy comparisons, and it keeps everything in sync.
Yeah.
Let me get the volume out of here. I don't need to see volume.
Yeah, that's pretty good. Yeah, tech stocks ran pretty hot, and everything else is down. So anyway, so I've been shorting ES and YM over the last few days, and I haven't updated anybody about it. I haven't told anybody about it because it is extremely risky. Because as you can see, the market has been going up and down probably 400, 500, 600 points, but for the last 7 days. And so it's extremely risky. And I am currently down about 25 grand on that position. So it's been a tough one to hold on to, but I think it's illustrated because a lot of people don't talk about their losers. Nobody talks about their losers. They always talk about their winners. And of course, I talk about my winners too. But I think it's illustrative of the fact that I'm fairly convicted and convinced that the market is going to decline. And I put my money where my mouth is, and I'm paying the price for it right now. So it's kind of tough holding on to that position, especially since we're up so high on the YM and the ES today. However, I am going to stay with the position a little bit longer because I do believe that we are going to see a lower market in the future. Now, how much am I willing to lose in order to put the conviction? Yeah, probably yesterday's high on the YM. If it does cross that, then we're probably going to higher highs. And so I'm using technical analysis as an indication of where I should be getting out of this position. Now, a $25,000 loss is not suitable for all accounts. I do have an account size that allows me to lose, that kind of money without too much of an effect on my account. But I am fairly convicted that we are going to go lower. We'll see over the next couple of days if I'm right. But there's nothing rational about this market. And so I'm thinking in a rational way that 750,000 people a week being unemployed, reopening is probably delayed until next summer. This summer, I don't think we're going to have the reopening everybody's anticipating. I also think that as soon as we do get a downdraft in the market that is sustainable, that really, really we get a sharp drop in the market, people are going to be covering like crazy. And so they have to they're going to sell their stocks. Boy, that chart looks really bullish. Thanks for bringing that up, Dan.
I'm not trying. I'm just saying that I was thinking about the sharp drops, what we could have a repeat of that'll save your position potentially.
Yeah, I know. Well, the only thing I'm looking at, yesterday I looked at both CHI, which is up huge today, and CWB. And both of those are convertible bond funds, corporate bond funds. And when I see those things drop, in fact, bring up CHI because I think if we take a look at that, one of the things that I'm really, really watching carefully is the divergence between these, what they call CHI, which is a convertible opportunity bond fund, which are basically triple B and lower bonds, corporate bonds. If we get a divergence between those and stocks, which we can see in this chart, on the daily, we've made lower highs and lower lows on CHI, but we've made higher highs and higher lows on the YM, on the Dow stocks, and on the ES. And when you get that divergence, it's the same divergence that we saw back in March of last year. Let's see if you can go to a weekly and show that divergence there, because we're 52 weeks into this thing, right? So we're in March of last year. Yeah, so we had actually had a decline. We came back up, and then we started to see a divergence because the markets continued to go higher, and then we had this divergence. And actually, CHI started to get weaker, and as it got weaker, that was kind of the signal that small companies were really in trouble, and that's when the market was going to go down. Well, now we're kind of seeing the same thing. We're getting this pullback in CHI. And the market has continued to go higher.
Interestingly enough, too, look at what happened to the volume, where the volume really pumped in here on this down week. Mm-hmm. And we're starting to see volume is starting to be higher than previous again.
Pump up, yeah.
With last week, and we had a down move.
Yeah. So not financial advice. Certainly shorting this market is extremely high risk.
Yeah, it's easy to, and I've been in the same boat where part of the reason that I talk about in some of the other classes, or just in general, of I like to take the long positions because, yeah, exactly what Dave mentioned there is you need to have the account to sustain a potential move against you if you want to play it longer on like a swing strategy. Whereas if you're just doing day trades or shorter swing trades, it's easier to only play the long setups just for that reason. Because yeah, I got burned doing the same thing on NQ. It's like we have to take a drop. But I was looking at all the indicators and everything said it should. Well, it does, but as David mentioned himself, I was early many times, and sometimes it's painful to be early. So I get out, it's like, okay, change my trading strategy and remove those potential downfalls and take away some of the shorts unless it's the right thing. Like I'd mentioned last week, I think I took a couple shorts, but were very short time frames because I've lived through that and I try to remove that ability now. So yeah, I think it's a good thing you mentioned, Dave. No one talks about when you have a loser. And it's like there is a reason that you form the strategies that we do and that we've shared that we have is based on our experience of, not that we say do this or don't do that, but here's what may happen if you do that, because here's what we've lived through. Dave's living through it right now where he's got his own little mini short squeeze, if you want to call it that, because the markets continue higher.
Yeah, I think somebody saw me coming and said, we're going to squeeze them.
It always feels like that, doesn't it? It's like, I know they know what I'm doing.
Yeah.
But that's exactly it.
Well, the reason, see, I've got reasons why I'm shorting. Number one is the market timer spreadsheet sees an increase in MT volatility. Okay, so that's one reason. The second reason is that we're also looking at, I think at some point, the markets can stay irrational for a very, very long time. And I think it's been irrational now for about a year. And so when we start to come up on the anniversary of the bottom of the market in 2020, which is on March 13th or the 18th, I believe it's the 18th, there might be some rational reset. Who knows, so I may have to hang out here for a week or more, but, we'll see. I mean, this, at some point, the market will go rational. The problem is, can I stay solvent as long as it is rational or
right,
irrational?
As long as it doesn't turn at 60,000, then you're really.
Well, I also have some long positions, so I'm slightly hedged. So here's a kind of a, over the last 40 years, I'm never typically just all in short or all in long. I have some long positions and then I have some short positions. And so my long positions have certainly done very well today. And so I'm slightly offset, but just in the positions that I'm short, I'm down 25 grand in total. Now, and so I'm not making money, but I'm not losing as much as 25 grand I'm short on the futures contracts either, because I have long positions. So that helps a little bit buffer the kind of psychological aspects. If I was 100% in on a short position, I'm not going to hold that thing. That I would have gotten knocked out early this morning or late last night when the futures opened up 140 points.
Yeah, they gapped up last night again, didn't they?
Yeah, they did. Yeah. And so I knew my stock position would probably offset, my long stock position would offset a lot of the losses in my futures contracts. But when the market does drop, if it drops, I'm going to I'll have, because it's leveraged positions, I'm going to have a lot more profit on the downside. Now, like I said, there's a lot of stuff going on in the market right now. I think one of the things I'm thinking about is, number one, they're going to sell the news. So, when the $1.9 trillion stimulus package does pass, that's a sell the news type of event. Maybe. Hasn't worked all year, because every time they talk about stimulus the market has gone up. But when they passed stimulus, I want to see whether or not the market's going to decline, and it might happen. Still nothing in crypto, Andreas. I did an update. If you didn't get my update to the cryptocurrency forecast for 2021, I did do an update. There's no change to that update, though. If you didn't see that, you should go take a look at it.
Yeah, and speaking of stimulus too, one thing that they've already been talking about, especially with the infrastructure that got exposed in Texas and whatnot, is I think they're already talking about another $3 trillion stimulus, whether it's packaged. The one thing I wish they would change about the news is they keep saying, the COVID stimulus bill is going to pass again. It's like, it's not a COVID stimulus bill, people. That's just a small part of this whole package, right? It doesn't make up any, that's maybe 300 or 600 of the 1.9 trillion.
Yeah, where's the COVID part? I mean, it's a couple billion, maybe $1 million, or no? What is it? A couple $100 million?
It might be a couple $100 million.
Couple $100 million in vaccine, but that's it. Where's the other Where's the other 1.7 billion going?
Right. That's the hard part. We're just like, we're throwing around these numbers, right? Oh, it's only a couple $100 billion, or it's only a couple $100 million. What's the difference? It's like, yeah, we're talking $2 trillion here, people.
Yeah, I heard 250 million was going for extended unemployment benefits. That's only 250 million.
Yeah, that'll be dried up in a hurry.
Yeah.
At the rate they're printing checks for unemployment, yeah.
And isn't the purpose of this bill to help those workers that can't go back to work?
You would think that's what they call it, but then once you start looking under the covers, all those money go a lot of different places. I think our friend George mentioned it. That's, the government's giving itself stimmy checks in this package, not just the people. The government's getting it too.
Yeah, there's a ton of pork.
And yeah, there's the next one's already being talked about. 3 trillion here. It's like, yeah, it's just literally funny money.
And the only person in buying these bonds at zero rates is the Fed. There is no market for bonds. None. So with that, we are at the top of the hour again. And, everybody keep a heads up. There's a lot of volatility in the market yet. Today might be an anomaly. We go up today, we go down tomorrow, just like we've seen over the past couple of weeks.
Definitely. And just for your late breaking weather report, we're getting record highs today. So warm weather's coming your Dave. We're going for 65 to 70 today.
Holy cow.
Boom.
I did look at the forecast. It's going to go into the 60s. Well, I don't think we're going to hit 70, but 60.
We got a record high coming today. We're breaking it. 62 is the record. We're going to shatter it.
Jeez. Andre's asking what the spreadsheet is showing.
Let me grab it here. Andre gets the last minute with a spreadsheet. Let me bring it over here. No hurting at all, which is very rare for yesterday.
Yeah, tug of war going on between the Bulls and the Bears. No hurting whatsoever. They were evenly matched yesterday, and nobody scored a point.
ISL went right to a -0. We did have a 27-day sum that flagged being over 1,500, so that's a little bear sentiment. So that'll help Dave's psychological position.
Maybe. I think I'm just going to walk away from my computer today.
MT vols on the rise. We're in the 90s again. So will that drop or not after today? We will see.
Yeah, that's 92%. We should see some. I'm always doing intraday updates, which kind of messes up my spreadsheet, but we probably will see some bullish hurting today. We are seeing MT volatility get into the 90s. If that holds, we'll see. We're still kind of neutral on the buy sell, but you're gonna type in some numbers, right?
Sure. While you're chatting, I'll put in the real time.
All right, awesome.
We'll see where we're at. Looks like pretty heavily bullish.
Yeah, 2-1.
And we're at 66.84 and about 262, 61. Still at 92 vol.
Yeah,
and some bullish hurting right now.
Yeah, we got some pretty heavy bullish hurting, at least at this hour. But still 92 vol. What's the 21, 27-day sum? I bet that's going to be pretty high now. 21's going to catch up. Yeah, it's catching up.
And we got a buy sell right now.
Yeah.
Still heading down in the LT though, the long-term signal. We peaked up around 2.5 and it's still cruising down.
Yeah, we'll see. I don't know. I may have to cover my shorts, but I'm going to wait till the end of the day, see how this plays out.
Yeah, with that, we'll wrap her up. So appreciate your last minute question there, Andre. And Curtis, Jeff, Dave, Jeff, good to see you, Kyle. You're welcome, Curtis. Appreciate you guys.
Welcome, guys. Thanks for joining us. We'll see you on Thursday.
See you guys. See you, Dave.
Take care, Dan.